You need to hear this if you're an investor. Hey everyone, it's Yacht. Let's talk stocks, specifically the US stock market. Did you know that the US stock market alone accounts for a staggering 75% of the global market capitalization? That's right. Three-quarters of the world's total market value of publicly traded companies is concentrated in the United States. It's mind-blowing, right? But how did this come to be? How did the US stock market become such a dominant force in the global economy? And what does it mean for investors like you and me? Well, in this video, we're going to dive deep into the heart of the US stock market, exploring the factors that have propelled its rise to the top and what the future holds for this financial powerhouse. Stick around as we break it all down in today's video. Reason number 1. Home to global giants. The US is home to some of the world's largest and most influential companies that are practically household names around the globe. We're talking about giants like Apple, with its sleek iPhones and loyal customer base. We're talking about Microsoft, the software behemoth that's been a mainstay in the tech world for decades. And let's not forget Amazon, the e-commerce titan that's revolutionized the way we shop, or Google, or rather, its parent company Alphabet, the undisputed king of search engines and online advertising. And, of course, there's Tesla, the electric vehicle pioneer led by the ever-so-innovative Elon Musk. These tech giants alone, and this is just to name a few, contribute trillions of dollars to the US market capitalization. Just think about that for a second. Trillions. To put things into perspective, Apple's market cap, as of 2023, surpassed a mind-boggling $3 trillion, making it the most valuable company in the world. Now you might be thinking, okay, so big companies, big market cap, got it. But it's more than just their size. These companies are global powerhouses, with operations and customers spanning every corner of the world. They're not just American companies. They're global brands that have captured the imagination and wallets of billions of people. This global reach translates into massive revenues, profits, and ultimately, market value. These companies are constantly innovating, expanding into new markets, and growing their customer base. This relentless growth is a major driving force behind the US stock market's dominance. But it's not just about these tech giants. The US is also home to a diverse range of other industries, from healthcare and finance to consumer goods and energy. Companies like Johnson & Johnson, Berkshire Hathaway, JP Morgan Chase, and ExxonMobil all contribute significantly to the overall market cap. This diversity is another key strength of the US stock market. It means that the market is less susceptible to shocks in any one particular industry. Even if one sector experiences a downturn, others can help to cushion the blow and keep the overall market afloat. So the next time you're scrolling through your phone, browsing Amazon, or watching the latest viral video on YouTube, remember that you're interacting with companies that are not only shaping our world but also driving the US stock market to new heights. Reason number 2, a deep and liquid market. Now let's talk about liquidity, the lifeblood of any healthy financial market. In simple terms, liquidity refers to how easily you can buy or sell an asset without causing drastic price swings. Think of it like this. You want to sell a rare antique vase. If there are only a handful of collectors interested, you might have to lower your price significantly to find a buyer. That's low liquidity. But if you're selling something like, say, a popular smartphone, you'll have no problem finding a buyer at a reasonable price because there's high demand and a large supply. That's high liquidity. The US stock market is known for its incredible depth and liquidity. With over 4,000 publicly traded companies listed on major exchanges like the NYSE and NASDAQ, there's no shortage of investment opportunities. Whether you're interested in tech, healthcare, energy, or any other sector, you're sure to find a plethora of companies to pique your interest. This vast selection of investment options is one of the key reasons why the US stock market is so attractive to investors worldwide. It's like a massive financial supermarket where you can find anything you need, from blue-chip stocks to small-cap growth companies. But it's not just about the number of companies. It's also about the volume of trading activity. Every day, trillions of dollars exchange hands on the US stock market as investors buy and sell shares. This high volume ensures that there are always buyers and sellers available, even for large transactions. This is where liquidity comes into play. Because there's so much trading activity, institutional investors like pension funds and hedge funds can buy or sell large blocks of shares without significantly impacting prices. This is crucial because it allows them to enter and exit positions efficiently without worrying about moving the market against them. For individual investors like us, high liquidity means that we can easily buy or sell shares at a fair market price. We don't have to worry about getting stuck with an illiquid asset that we can't unload when we need to. This ease of buying and selling is a major advantage of the US stock market and a key reason why it attracts so much foreign investment. Investors from all over the world feel confident putting their money into the US market, knowing that they can easily access their funds when they need them. So the next time you hear the term liquidity, remember that it's not just a fancy financial term. It's a fundamental factor that underpins the strength and stability of the US stock market. Now let's talk about trust, or more specifically, investor confidence. Investing, at its core, is all about trust. You're trusting that a company will use your money wisely to grow and generate profits. You're trusting that the stock market will operate fairly and transparently. And you're trusting that there are regulations in place to protect your investment from fraud and manipulation. The US stock market has earned a reputation for being one of the most trusted and well-regulated markets in the world. This wasn't built overnight, of course. It's the result of decades of hard work, regulatory reforms, and a commitment to transparency and investor protection. At the heart of this regulatory framework is the Securities and Exchange Commission, or SEC. The SEC is like the sheriff of Wall Street, tasked with enforcing federal securities laws, proposing new rules, and ensuring that investors have access to all the information they need to make informed decisions. One of the key ways the SEC builds investor confidence is by requiring publicly traded companies to disclose a wealth of financial and operational information. This includes quarterly and annual earnings reports, details about executive compensation, and any material events that could impact the company's performance. This transparency is crucial because it allows investors to make informed decisions about where to put their money. It levels the playing field between Wall Street insiders and everyday investors like us. But the SEC's role goes beyond just disclosure. It also investigates allegations of insider trading, market manipulation, and other fraudulent activities. When these bad actors are caught, they're punished to the fullest extent of the law, sending a clear message that such behavior won't be tolerated. Of course, no system is perfect, and there will always be individuals and companies that try to game the system. But the US has a strong track record of adapting its regulations to address emerging threats and protect investors. This commitment to investor protection is a major reason why the US stock market continues to attract trillions of dollars in investment from around the world. Investors feel confident knowing that their money is safe and that the market is operating fairly. So, the next time you see the SEC in the news, remember that they're not just some faceless bureaucracy. They're the guardians of our financial system, working tirelessly to maintain investor confidence and ensure the integrity of the US stock market. So, what does the future hold? Will the US stock market maintain its dominance, or will emerging markets rise to challenge its position? Only time will tell. But one thing's for sure. Understanding the US market is key to understanding the global economy. As we've explored in this video, the US stock market's dominance is no accident. It's the result of a unique combination of factors: a thriving ecosystem of innovative companies, a deep and liquid market, and a robust regulatory framework that prioritizes investor protection and transparency. Whether you're a seasoned investor or just starting out, I hope this video has given you a deeper appreciation for the inner workings of the US stock market and its impact on the global economy. Thanks for watching, and don't forget to like, comment, and subscribe for more content just like this. Until next time, stay informed and keep investing wisely.